Welcome back. A big story coming this week from China. Now remember, while NVIDIA's Blackwell and Vera Rubin series for AI data centers and the GeForce RTX 4090 chips may still be elusive for Chinese consumers, their onshore investor frenzy for AI chips has definitely intensified. I'm talking about the initial public offering of Beijing-based GPU maker Moore Threads, which has drawn more than 4,000 times subscription from retail investors this week. Now, this red-hot demand from Moore Threads highlights China's determination to build homegrown alternatives to NVIDIA's chips and is expected to accelerate listing plans for other Chinese domestic GPU developers, all the way from Meta X to Byron Technology. Moore Threads opened lottery-style subscriptions on Monday at an IPO price of 114.28 yuan, which is around $16. Doesn't sound too much, right? But wait for the real kicker. Now, online orders from retail investors exceeded the number of shares on offer by more than 4,000 times, resulting in a final allotment rate of just 0.036%, according to the company filing, which came on Wednesday. Now, Moore Threads raised about 8 billion yuan, that's about $1 billion, valuing the company at 53.7 billion yuan, that's just a little short of $8 billion. Now, its debut date has yet to be finalized, but Chinese authorities have been guiding private capital towards supporting the country's drive for tech self-sufficiency, particularly in semiconductors and GPUs. Now, Moore Threads was founded in 2020 by a James Zhang Jingzong, a former NVIDIA vice president and head of its China operations, who spent 14 years at the US chip giant before striking out on his own back in his own home country of China. Now, joining us to unpack what's going on with the Chinese IPO boom, especially when it comes to technology, and how does India really stack up in that AI race today, is none other than Gaurang Shah. Mr. Shah, good morning and pleasure having you here with us on News9. Now, obviously, this news making a lot of hype in China and amid Asian investors. It seems that China is trying to very hard to catch up with its US Magnificent Seven counterparts. How are you reading this play?
There's been a race which is not going to end as far as the technology related boom is concerned. But let me also say that along with this boom, there is also fear of a bust that may happen, especially in the US, the way we've been reading. So it's no surprise, Karthik, US and China have always been at each other when it comes to one step up with respect to any kind of, whether it is technology or anything else. So it's not surprising that here also you are seeing an elevated competition given from China to US tech giants, especially companies like NVIDIA, etc. What remains to be seen, Karthik, is how successful this story is, right? Because eventually expectations do run ahead of what companies can deliver. And that's exactly the fragmented, views that people are having with respect to what US is doing. So while everything is well right now, one needs to be careful as to what is going to be the scale of growth for these companies. One should not expect too much and not run into it with great expectation.
All right, but I want to spend a minute or so on something that you just mentioned about any story that comes with a boom also has this fear of a bust. And I'm talking about the theory of AI being a big bubble and only becoming bigger with every passing day. Which side of the pendulum are you at? Do you think AI is already in bubble territory, or do you think it's getting there?
And so if you ask me as far as India is concerned, Karthik, I think we are at a very nascent stage. We have yet to scale up to a great extent. And I think post the second quarter numbers, most of the management who came and gave out verbatim regarding their growth some part of that verbatim was focused with AI and what are they planning to do. With respect to US and China, I think they are possibly a couple of steps ahead of what we are doing. Mm-hmm. But again, that's where the fear comes in, Karthik, because we've already saw the kind of correction some of the tech-related giants listed in the US stock exchanges and what happened after that. Despite of the stellar number, I think some of the companies did correct over there post the numbers because of the fear And that's what it is. The case of or the case of fear of missing out, or the case of expecting too much before what the companies can deliver. So I think we are at a very nascent stage. I don't think as of now, the whatever lies in front of me, if I have to make a decisive comment, I don't think we need to fear too much as far as the Indian tech companies are concerned. When it comes to China or US, I think you have reason to worry.
Coming specifically to China, do you think at a policy level, perhaps the US administration right now under President Donald Trump is being a little short-sighted in preventing NVIDIA from exporting those Blackwell chips to China? Because here we have an example of a homegrown Chinese company which is building its own GPUs, which could potentially, or not, but potentially compete with NVIDIA. And this is pretty much a team which belonged to NVIDIA, which is now making its own chips.
You can't have restrictions, Karthik. When you are in a competitive field, you have to reach out to the world, right? And eventually, if you do end up putting firewalls or any kind of restrictions or barriers, it is going to boomerang on yourself and that particular company. Now, when it comes to China, to answer your question, I have this long-standing feeling that how much do I trust of what comes out from China? As we all know, it's a closed guarded economy. People don't have access to a lot of things that you and me have access to. And how much of credible or valid are the kind of news flows that are coming? How much is actually on the ground, and how much of it is buttered by the by the government over there or the administration over there? So that's a big question. And we all know, last couple of years back, the situation in China as far as real estate is concerned. I think 3 days back we had one more it was too big to fall kind of a company again in China in the real estate. I forget the name, hitting the news for all the wrong reasons. So, just let's wait and watch. I think eventually we need to know the numbers and the growth prospects. If that comes to expected lines, it is good enough. If it doesn't, then like I said, frothy valuations will find its position downwards.
All right. And this specific company, Moore Threads, a 4,000x subscription, does that seem normal?
So while the numbers may be true, I don't know. I mean, I don't have valid data to counter that. But like I said, sustainability, Karthik, is something that needs to be there, right? If sustainability is not there with the numbers, whether it is, subscriber base, or whether it is footfalls or eyeballs or views or whatever it is, they need to sustain at a higher level and scale it upwards, right? If you want to grow further.
All right. Well, let's leave it at that. Gaurang Shah, thank you so much for your time. Always a pleasure having you join us here on News 9, and always great listening to your views here.
Thank you, Karthik. All the very best. Thank you so much.
Thank you. All right, with that, we will slip into a short break. But coming up on the other side, McKinsey estimates that generative AI could boost operating profits in the fashion, apparel, and luxury sectors by up to, hold your thought, $275 billion by the year 2028. Well, News 9's Amit Ranjan Kumar will explore the 10 use cases of AI in the global fashion industry, which is making use to cut costs, increase personalization, and operate more sustainably, all on the back of artificial intelligence. Now, does that mean that huge job losses in the fashion industry are to follow? Find out after this short break.